Hey guys, this is Simon with Trading Perform Coaching, and I wanted to do a review of CL. Normally, I only cover CL in the trading room, but ES is a total hodgepodge. We're just in a total grinder there, and there's not a lot to discuss when we get a 6-point range, and our entire afternoon's range is 2 points wide, right? So let's talk about, instead of where it's really hard to make money right now, which is the volatility is really low in ES. Let's talk about where there were opportunities to make money and what we're looking for in the room to find where we're looking to find responsive buyers and for continuation. So that we have two types of trades. One's a balanced trade, and a balanced trade is defined by me, at least, by a trade that's contained within the prior day's high and low, and even more specifically when we're caught between London session high and London session low. Right? So if we'll come and look at, so let's start kind of go really big and then come down to a small size. And before I forget, let's do the disclaimer really quick. I have to put this up on the legal notice. Important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. The past performance of any trading system, mine or anyone else's, or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, so first of all, it's been a little bit tough the last couple days. Wife has not been feeling great, so I've been behind on posting videos and kind of just kind of getting everything done that I want to get done. Let me get rid of these drawings here real quick. Let's see, remove drawing objects, select all. Okay, so first, this is CL. So the first thing that you're going to notice is we are in a clear and absolute downtrend. However, just because we're in a downtrend does not mean that we can't reverse and go back into an uptrend. I want to, and before I even go that far, let me get to a couple of things. I talk about the broader market, but there's three principles that stand in my room and in my trading that are very, very important. Principle number one, do not draw down if at all possible to avoid doing that. What do I mean by that? By that I mean follow your process. Know that your process has a win rate and a risk-reward ratio that will allow you to take that trade 5, 10, 15, 20, 25 times in a row, right? What we're trying to eliminate is the fear response. Build confidence and trust within yourself to follow your process, right? And then the last piece that we're trying to build is repetition of taking the trades and early identification of what type of market we're in. So, first of all, from the large time frame, we clearly and absolutely are in a downtrend. You can measure it all kinds of ways, but here's channel 1, here's channel 2, and you can see we ran right into the top of that channel today, right? And there is another channel right here that we are trading in. We fell out of it. And then finally we have this last channel right down here that's lining up somewhat like that, and that's kind of the four larger frame channels that we're looking at. What you'll notice is right now we have a very small uptrending channel right here, and it has to start somewhere, right? So you can see we started that uptrending channel and it took place for a long time. So we have the potential, if we hold this channel right here, if we hold this channel, we have the potential of coming in and doing exactly what we did here. If you look here, we started this up channel and we just never broke below it. And the key to that would be breaking above here, right? And then holding along this channel, right? Or at a sharper angle to push up. That's speculation. That's not what the market's telling us. That's just what it could potentially end up looking like. And it would end up looking very similar to this on a day-by-day basis, and that would be categorized by seeing higher lows and higher highs on a pretty regular basis, and a difficulty for the market to sustain below prior day's low, right? Definitely pretty much the opposite of what we have here. So I'm not a fundamental analyst. I don't know. I don't follow supply. I don't follow rig count. I don't care about any of that. I'm a price action trader, and I'm a momentum trader primarily in CL, and with some balanced trades thrown in. But my primary focus is to find the momentum trade and take advantage of it when it's there, because it has such a high win rate for me, which is what I'm mostly concerned about, right? So now let's flip to today. Now that we got that covered, let's erase all this. How am I doing on time? 5 minutes in. My goal is to finish this by 10 minutes. So on all these time frames, meaning the 240, 60, the 15, 30 when I have it up, 5, and the 2, what I want is, instead of drawing trend lines, I use the 20 period exponential moving average as a de facto trend line for me. Okay, that's all it is. I don't have, you can make it 19 minutes, you can make it 21 minutes, you can make it 18 minutes. I don't care what you use. It's simply a visual for me to see very quickly what I want when I'm taking momentum trades. The first thing I want to see is everything pointing up, right? Everything pointing up along the way. The other thing that I want to see is, and then the other point is, I want velocity. That's very hard to obviously show afterwards, but you can tell when we're breaking out, if you look at the dome, how fast but we're clearing through levels very, very quickly. Very little volumes getting done at each level, and that's because there's a lot of velocity to the upside. That's the other characteristic that I'm looking for. Next, I'm looking for the relative strength index on the time frame that I'm trading to be above 50. That's very, very important that the RSI is above 50. I don't have an RSI on this chart, but normally I do. We can add it so that you can see it. Let's do that really quick. We'll insert it on the 5-minute chart. It's just a regular, there's nothing special about it. Let's see if we can find it. RSI. There you go. So, well, that's not how I wanted it to turn out, but you can see, here we'll narrow this a bit. I did not want this to come here, but you can see that today, here's the 50, which is what I care about on the RSI. I don't care about overbought or oversold. I simply, when I take my long off of a 5-minute, I want the RSI to be pointing up. So let's say that one more time. I want to be above London high or below London low. Additionally, as a second tier indicator, I'd like to be above prior day's high or below prior day's low, right? For momentum, obviously that helps, right? Next, I want to see the RSI above 50, right? And then I want, on as many time frames as possible, right? On as many time frames as possible, I want to be above the 20 period exponential moving average, right? On all these trades, I'm going to show you right here. Let's open this up. So I want to be above the 20 period, right? And then I want the angle of attack to be greater than 45 degrees, right? On as many time frames as I can get, right? So starting from the 240, working my way all the way down to the 5. The 2, let's not worry about that. That's more of a specialized setup. But coming down to the 5, I want all the angles pointed up. Okay, so the reason why this is important is, what does it look like once it does set up? So we know that the RSI was above 40. We know that we were, this morning, that we closed above right here on the 240, above the 20 period. We were above on the 60-minute. We were clearly above on the 15-minute. We were clearly above on the 5. So now let's go to the 5 and talk about what the entries look like, right? So let's get out of the drawing mode. And I'm going to go over my 10-minute period, but just barely. So let's minimize this. Here we go. There we are. We'll minimize that for now. And we will drag this around. So this is our beginning of our move right here. Now, this is oil inventory days. And I do not care about catching this initial push here. I want this initial push, right? I'm trying to catch a second and third legs. Now, this is a specially modified stochastic, and this indicator has provided some really I mean, the setups have really been fantastic. The win rate is extremely high, and it's really helped out a lot of the members in the room, a lot of the guys that I coach one-on-one. It has become a great resource for profit on this particular setup, particularly when ES has provided such little volatility and so few setups, right? We've had to go to find where the money is. So on this right here, these were our potential entries. So this was oversold. What we're looking for is impulse move up, and then for the indicator to get oversold, right? We get oversold here. Now we're waiting for, I'm going to move that bar. We're waiting for the oversold. After we get the oversold, the first green 5-minute bar, right, that closes positive. We go long, and then my stop is very simple here. The stop is going to be 1 or 2 ticks right below this low. So I can tell you today the first entry was triggered at 47.16. The stop would have been 47.09 or 47.08, 8 ticks, and that provided a potential risk reward, right? Because look, it never penetrated that low, right? And scale and move your stops up as you're moving along. And if you did that successfully, you had the potential to reach all the way to 47.60 and change, or even higher if you trailed it long enough, right? That's a phenomenal risk reward setup right there, right? The next entry, now I want to show you something. The next entry, and because we believe in tight stops, I don't like drawing down. So this is the next trigger. This bar right here, right, we're oversold. Everything is still pointed up. And what the focus is on the first, second, and maybe third entry. Now I want to show you something. This entry right here is where it triggered, where this stop was. So I want to expand this out so everyone can see it. In terms of risk reward management, right? So everyone has to have, I know where my risk reward management is. I want to keep my stops as tight as possible while still letting my trade survive. That is my objective. And that varies by what I am trading. In ES, it's different from what it is in CL. In this particular case, I'm almost always going to move my stop right below the lowest swing low. And that would have been right here at 47.44. My entry would have been roughly 47.48. Take away a tick. That would have given me approximately a 4 to 5 tick stop. That would have gotten stopped out. However, my comfort zone, the stop I can afford, is approximately 10 ticks. I don't just go in there and put a 10 tick. I stated the methodology, but what that allowed me to do, right? See this second entry right here? This is your second signal to enter off the same old oversold indicator. Now your entry parameters changed a little bit, right? Maybe you're down 4 or 5 ticks. 47.49. Your stop now comes out to 47.38. 11 ticks, but remember, you already had one profitable trade here. You lost 4 or 5 ticks here. You can take one last shot, this third time right here, right? Your stop was 11 ticks, and look at the reward again. Look at where it ultimately pushes up from 47.49 all the way up to 47.74, right? And actually eventually 47.77, right? That's a fantastic, again, a fantastic risk reward, and one of the reasons why we really focus on hunting down this trade when it presents itself. Preferably not on oil inventory days, which can be harder, but certainly an hour after oil inventories come out, and if you have the risk tolerance, it's a viable trade, right? So those are the 3 entries off of that trigger. Again, this trade does not set up every day. And then the last piece was, if you look coming into the day, here's the 2 a.m. London Open. Where are we? Let's go all the way back here to 2 a.m. Here is the 8 a.m. U.S. Open. a.m. 2 a.m. So we met all the criteria. London high, impulse move up, oversold, oversold, entry 1, 2, and maybe 3, as long as it's within your P&L parameter, right? And then there's another key to this, right? So there's clearly a process we're following here on the entry, right? So I have a maximum drawdown, two full 10 tick stops back to back. I stop, right? Not going to take the trade anymore, right? Number 2, it has to meet all these criteria. Above or below London high, there has to be an impulse move. Number 3, has to get oversold on the indicator and give me the appropriate entry, right? And number 4, RSI has to be above 50. But when you meet those, the win rate is very, very high. The objective is to scale, move stops up to break even, let your trailers run, and when it works perfectly, it looks like this. So I went over my 10 minutes. I'm at 15 minutes, so I'm going to cut it off now. If you are interested in either one-on-one coaching, that requires a conversation to make sure our personalities match up, or if you're interested in coming visiting us in the room for 5 days, it's on me. Just send me an email to tradingperform@gmail.com, or you can send me a Twitter message or a StockTwits message, and I'll respond to that. The room is $95 a month, and I believe it pays for itself in spades, month in, month out. We've had members in the room for over 2 years, meaning not members being in the room for over 2 years, members that have been members for in excess of 2 years, going on 3 years now. I think I opened the room back in 2013, so maybe it's been 4 years. Some of the original members are still in there. And the reason why is the objective is complete focus on process, right? Focus on risk management and focus on adaptation to what the market is offering and finding ways to adapt our process, right? So that we don't get scared, we don't let fear interfere with our decision-making process, and the entire goal is to end the boom-bust process. And I've done that very, very successfully with a lot of traders. And if that's something that you're interested in, please contact me, and I'm more than happy to extend you a pass into the room. Hope everyone killed it and made a lot of money. Don't draw down. Don't boom bust. It's not necessary. There's ways around it. Work off of process, not off of gut. There's a lot of money to be made, but you've got to have a system and a methodology for pulling that money out. Have a good night, everyone. See everyone in the room in the morning.